The decision by Saudi Arabia to extend the 1 million barrel cut through December, you say it's a pop quiz for investors of all kinds. So I'm looking at the prices right now. Who failed this quiz? Who passed?
Right. So I think the market generally got a C on this quiz. They had expected that Saudi Arabia and Russia would roll over their cuts through October. So the real surprise is the last 2 months, November and December, of extending the cuts. Analysts had been projecting a taper, not a full bring back of the full million barrels in November and December. So most analysts had projected that Saudi Arabia and Russia would bring back 300,000-ish barrels in November and 500,000 in December. So they had been whispering that an extension through December was possible, but nobody had actually done the work to adjust their balances. So I give them a C on that, and I give Saudi Arabia an A+ for continuing to keep the market on its toes and giving out pop quizzes, and also making sure that short sellers know they will be sent to detention if they start to get too aggressive in the market. I think Saudi Arabia really wanted to prevent a December 2022 event where we had massive volatility into the year end.
Interesting metaphor, the Saudi energy minister basically being the teacher in this metaphor. So you mentioned short sellers. Oil's up about $3 a barrel since the start of September. Does that deeply impact short sellers? And I'm also looking at the dollar up 2% in the second half of the year. How do these two things, where's the equilibrium there?
Well, so that's a great question. Short sellers got absolutely flushed out of the market over the last 2 months. If you look at the CFTC data, shorts have been reduced significantly. So they are no longer of the prevailing force in the market. They are on the sidelines right now. In terms of the dollar, I have been surprised that crude has held up so well in the face of the recent rally. I think what we're seeing today, as we're seeing crude give back some of the gains we had yesterday after this announcement, is a reflection of what's happening with the dollar and the broader macro picture of how this move and the move higher in oil is starting to change the narrative as we talk about inflation globally. So it's a factor.
Let me jump in, Rebecca. You're talking about the macro picture. Before we let you go, I got to ask you about one thing. That's China. What demand are we seeing from China? Is demand from China, is that part of what's supporting this price action when it comes to oil?
Yes, so I think that's a misnomer in the market that China demand is lagging and not doing well. The big picture macro data from China has been weaker, but under the surface on a micro level, crude demand has held up exceptionally well and actually outperformed so far in 2023. It is underpinning part of the rally and the support in the market. What has been the headwind is macro and supply from U.S. producers outperforming and additional supply from Iran.
All right, we've had a big windup, so I think the real question for everybody out there who's an investor or just a consumer, are we headed towards $100 a barrel oil this year? Do you see that as a strong possibility?
So I don't think we see $100 this year. I think there's a huge factor, which is the upcoming political elections. And I think nobody in Saudi Arabia or OPEC Plus wants to start to take the heat politically of letting crude rip higher without bringing back supply. Let's be clear, they have supply to bring on. And I don't think it's in their best interest to do so. I think we see 95 Brent, 93 TI at some point towards the end of the year, not quite 100.